welcome our viewers here in Nigeria and around the world. Welcome to Your Business Morning. It's Monday, the 18th of February. I am Bosun Omofaye. Of course, we're live to you from Lagos, the headquarters of Channels Television. Let's start the morning after Nigeria's postponed general elections on Saturday. A new business week is starting today, of course, with the postponed election still on the cards of investors, traders, and the general economy. The boardrooms and executive management of companies today will be scrambling to reposition their operations and other key decisions in the face of the elections postponement. Investors will also be weighing Nigeria's recurrence of general elections postponement, which we had in 2011, in 2015, and now in 2019. How much of this recurrence of postponed elections will investors and businesses be factoring into the Nigeria political risk metrics moving forward? All of this will be part of our conversations today. Meantime, businesses, markets, and commerce, as well as schools, will be shut down again, expectedly this weekend from Friday. But so what is the cost of the elections postponement? There are figures ranging between $2 billion to $10 billion, depending on who you ask on Market Street. But there's no official figure yet as to what this elections postponement will cost Nigeria. Meantime, on Twitter, there are reactions from top-end economists and analysts around the world on their outlook on Nigeria's postponed election. This is from Razia Khan, who is the chief economist for Africa and Middle East at Standard Chartered. She says in her tweet today, Monday morning, broad consensus of political analysts' views I've read so far suggests that the Nigerian election delay may impact turnout, but probably not alter the eventual result very meaningfully. Razia went on to say that for the economy, it is more important that credible polls are held. Thoughts? That's a question there for folks to react to her view that the economy is more important to have credible elections and worry less about the postponement. But what actually happened in the course of the hours or days and hours before the postponement? You heard from the INEC chairman blaming bad weather conditions on Saturday. But the Honorable Minister of State for Aviation, Mr. Hadi Sirika, denies INEC claims that bad weather affected flight operations, leading to the cancellation of Saturday elections. In a tweet on his Twitter handle, Mr. Hadi Sirika, who is the Honorable Minister of State for Aviation, says, quote, INEC should say something else, as weather was good for flight operations on eve of elections. Similarly, all airports were directed to open 24 hours during the election period. That was the state of aviation or weather as far as the Minister of Aviation for State, Honorable Minister of State for Aviation was concerned. Move all of this to the economic and markets front. Nigeria's foreign currency reserves was down to $42.86 billion on February the 14th. That's just 2 days before the elections. Just as the Naira, of course, holds its gain against the US dollar at the investors and exporters window and the Market Street last week. Some good showing for a couple of weeks for the Naira. Meantime, as everyone was looking at the elections, the FIRS, the Federal Inland Revenue Service, on Friday issued a 30-day temporary suspension instruction to all commercial banks to lift the lien on accounts of customers whose tax payments are yet to be fully regularized. FIRS says the suspension has become imperative because of the large number of taxpayers visiting our office for reconciliation and as a result creating inconveniences to the taxpayers. In the week before the elections, the stock market made a very strong gain, more than 3%. The Naira hold is steady, and all this are what we're looking back now. In case you folks forgot about the markets in the run-up to the postponed elections, let's have some of the summary and the highlights here for you. Temple Ashaju, our business correspondent, is back on the floor of the stock exchange and is live to us from our studios there on the ninth floor. Temple, good morning. This is the morning after. But before we talk about the morning after, let's talk about the night before. That was the week before the February 16th elections. Good morning. Welcome to the program.
Thank Bosin. Thanks a great deal for, well, joining us here on the floor of the NSE, the ninth floor here. Well, we got last week very bullish in terms of equities, a bit bearish in terms of the debt market, and of course a bit of profit taking at the NASDOTC. That's the where you have the unlisted securities. We got the very first biggest gains in the last 4 weeks. Last week, equities rose some 3.76%. And of course, that was something that brought the month-to-date and year-to-date performance to a positive level as well. We saw a good increase there. Month-to-date performance rose to 7.06%, but year-to-date performance also expanding to some 4.009% last week. That's what we're able to get there. In terms of activity level, we saw a bit of decline. We saw some 2.83 billion units of shares traded last week. And for value for last week, we saw 28.14 billion naira worth of securities traded in the system. In terms of the deals, we got 28,733 basically last week. And that, of course, as I said earlier, was the largest weekly gains we've seen so far in the last 4 weeks, basically. In terms of the sectors, we start with the banking names, where you see Diamond Bank, Wema Bank, and of course UBA as well as FBN Holdings all doing so well, all helping to keep up the gains that we've had in that particular subsector of the market. The banking segment of the market did 1.59%, and if you move to the insurance segment of the market, we saw gains by 1.51% in terms of the indices of that subsector there. If you look at the industrial goods segment of the market, CCNN, WAPCO, and of course the Beggar Paints were basically helpful as well. Dangote Cement did some gains as well, and we're able to see the industrial goods segment of the market closing 1.62% upwards last week. Our consumer goods segment of the market was also up some 5.41%, and of course it was helped by likes of Unilever. Of course, Nigerian breweries also had some good gains there, moving upward from 80 naira last week. And of course, the gains we saw on Nestle last week was also helpful for that segment of the market. Consumer goods segment eventually closed 5.41% upward. The oil and gas segment of the market was also up 5.94%. And of course, O&O, which had some good gains there, was basically helpful for that. This, of course, takes us to the energy segment of the market, where we got corn oil remaining at the levels it's been for some time now. Forte oil had no movement in its price. It remained at 28 naira. That seems to have become the resistance level for that particular company. 11 PLC, which used to be known as Mobile, of course, settled at 184 naira after some 6,132 units of the shares were traded. MRS remained unchanged. O&O did some 6 naira in terms of its share price, and of course that rose some 9.09%. We saw some 9.43 million units of its shares traded on Friday. Seplat at 619 naira saw 6.72% increase. We got Total at 205 naira, Etana PLC at 4 naira 85 kobo, and of course Japol at 20 kobo, seeing a decline of 9.09%. Basically, unlisted securities segment of the market saw a bit of a profit taking, down 1.42% last week at 714.27, but still at the 700 psychological line. We got the market capitalization at 513.16 billion naira. Value last week was 2.7 million. In terms of the bonds market, or debt markets in general, we saw average yield widening some 4 basis points to 14.66%. We saw sell pressure at the short end of the curve after investors kind of traded down on February 2020, and that led to expansion by 1.43%. Demand for March 2024 security led to expansion by some 19 basis points, and of course the March 2036 security contracted by some 13 basis points because we saw a bit of expansion there. If you look at the two securities there, we saw expansion translated to expansion at the mid and the long end of the curve there. For the treasury bill segment of the market as well, there was a bit of bearish sentiment as well. We saw squeeze in liquidity last week, and yields at the end of the day rose some 14 basis points to 14.75%. As we saw sell pressure at the short end of the curve, we saw significant saw pressure at the 48th day to maturity security. There's slight demand for the 335 day to maturity brought about a kind of contraction by some 46 basis points. And of course, that was where we saw the most significant contraction last week, which translated to some 2 basis points at the long end of the curve. Basically, the mid end of the curve was flat last week. But if you put together everything we saw last week by way of the CBN OMO auction, we saw a total of 545 billion naira OMO last week. Bosun.
Okay, Temple Ashad, you'll see you a bit later on the program on the morning after the first trading day, after the elections postponement. So the first business day is today. You expect a lot of boardroom meetings, executive management meetings, and all of that. Folks trying to scramble back how to deal with the latest elections postponement and counting the cost, how to put staffs and others in position for another round of for the postponed elections that will now take place this weekend.